Makes about deep six figures, over 160K a year. I asked about 4, 5 B lenders, all declined. The private lenders, about three private lenders, if I remember, they all declined. So now I know the viewers like, wait a minute, even private lender decline? It's back to the character of the person. They would find ways and excuse to pay on time or pay off. As long as you can prove it, you can show it, yes, it does, it can help. 100% it can help. At the end of the video, I'll be doing a giveaway, so stay tuned.
Today, we have seen more Canadians than ever doing freelancing. They're running their own businesses, doing side hustles. But like most of them actually don't know how lenders sees their income. So today we want to talk about what if those self-employed workers, they want to apply for a loan, how would lenders see their application and what they should prepare before coming into dealerships. So first of all, before we talk about all the loans and approvals and stuff like that, what kind of jobs are actually regarded as like self-employed workers?
In simple terms, basically, if you're not a tax employee, you're self-employed. Okay. If you do all the taxes, meaning tax employees, so you get pay stubs, that would not be considered self-employed. Self-employed is a lot of work, from constructions to Uber, Lyft drivers, DoorDash, even like side jobs that people that hustle around, cash, stuff like that. Those are all pretty much categorized as self-employed.
Okay.
Yeah.
Would it be correct to say that self-employed people, they don't get pay stuff? Like the biggest difference between a tax employee and a self-employed worker is that they don't,
Correct.
whether they have a pay stub or not?
Correct. So tax employee will always get a pay stub. Okay. How they get it, whether it's head office or whatever, that's a different story. But 100% there's pay stub. Once there's no pay stub, then it's considered, again, would it be a cash job, under the table, stuff like that. But self-employed meaning you work for a company or a business or whatever it may be. They pay you either e-transfer, cash, whatever, but you would have to invoice them. Now, how many people do invoice and non-invoice? Different story.
Right. So self-employed workers are actually a lot of jobs are under the categories of self-employed. As
a whole, yes. As a whole, a lot of people can say they aren't. I get paid like this, but it still goes back to black and white documents, what you can provide.
Yeah, the documents.
Do you get T4? You don't get T4, right? Self-employed, you don't get T4, right? So some maybe T4A, T5, T2, different. But bottom line, if you're a tax employee, you get paid up.
I see. So when it comes to they want to apply for a car loan, what they can prove their income, what documents can be used to prove their income instead of pay stubs?
So any loans doesn't necessarily, it's pay stub, then you can get a loan. Anything that it's provable income, you can get a loan. So for example, the most traditional way or the easiest way for a lender is you get pay stubs, you have a T4, they look at your last 2 years, T4 or pay stub the last 2 months, stuff like that, or 2 recent pay stub we call it, then it'll be a lot more easier and more smooth for lender to look at the income because you paid your taxes, you're on time. Well, in theory, you're supposed to file taxes, right? And then there's consistent. Self-employed, there's a risk because self-employed, let's just say real estate agents, right? They're self-employed, constructions, self-employed, Uber, self-employed. It's your own leisure time. So the risk is today I want to do Uber, tomorrow I don't feel like it.
Yeah.
Then lender's like, okay, then how are you gonna pay me back your loan if you don't make consistent money? So at the end, if you can still prove it, so meaning back to the invoice, right? Anybody, let's just say even freelance do, photography, again, even Uber, construction, you work for a company, they charge you depending how they want to charge you, whether it's hour or project, whatever the case. Here's the invoice, so you invoice them the amount, and as long as that matches the deposit, also your bank statement with the invoice, it's still considered as provable income.
I see.
Yeah.
So the kind of documents that lenders accept would be bank statement and also invoices, from what you
For self-employed, yeah, bank statement, invoices. Sometimes they'll ask for them, articles from corporation, like is it registered? Is your business registered? Right. They might ask even like, NOA, notice of assessment, the last 2 years. It really depends on the loan. If it's like, let's say you're applying for a credit card, they probably don't even ask that much, right? Mortgage for sure, 100%. Car loan, to some extent, yes, depending on credit, right? Personal loan, HELOC, or just LOC, line of credit, really all depends. Depends on amount, depend on your credit. They may ask, they may not ask, they may ask more, they may ask less. Really also depending on the credit too, and how much you're asking for.
So it really varies when it comes to what type of loan you apply for.
Yes.
Yeah. What is somebody that they actually work for all cash jobs? They don't even get like checks. They don't deposit their income into the account even. What they can do in this situation if they want to apply for a loan?
Depending what loan, chances is you won't able to get anything. Right? If it's like a small credit card, like a $300, okay, maybe. 500, maybe. Again, depending on the credit, right? Because you could have someone like very, strong credit, maybe like 850, 860, 890, 780, whatever. Maybe a retired person just want a small little personal loan, 1,000. Yeah, it's possible. It's possible, right? So depends, but chances are no, because lenders don't discriminate. They're not racist. They're just in business. They lend money to basically strangers, to everybody like you, myself, anybody want to apply. So then they have to look at the paperwork, right? They have to look at, okay, how are you gonna pay me back? When are you gonna pay me back? Can you really pay me back? Can you afford paying me back? Whatever the loan you're asking for, right? So if nothing to prove, then why would I lend you anything? Right? Because when it's cash job like that, then I could just, hey, Kobe, I work for cash job. I make about $2 million a month.
Yeah.
Can you prove it? You can't prove it. So then it doesn't matter what you say then. Right? So that's why the pay stubs and all this is just a lot more easier.
Yeah.
And a lot more smoother when you apply a loan.
So the key is to have like black and white documents to prove that you actually get this amount of money, say like every month. And then it's not like I can like stack my cash on the table, put down like 100K cash on the table, and then the bank will give me a loan. It's not like that, right?
No, it's not like that. Especially if you have large cash like that, it's a huge red flag, because with the AML policy, the anti-money laundering policy, okay, where did you get this 100K?
Very suspicious.
Yeah. So it really, again, depending on the profile, the character of the person, depending what they're applying, what they're looking for, and what the amount they're looking for.
Yep.
Right? But if you ask me, just the basic fundamental is the pay stub would be a lot more easier, a lot more smooth, because it's just straight black and white. This is how much I make, my taxes are paid, and that's it.
Exactly.
You don't owe. Whereas self-employed, you pre-collected tax. Some people spend it, some people don't.
I see. I noticed that a keyword comes up a lot from what you just said, consistency. How do you prove consistent stream of income when you are self-employed? Because there are like good days and bad days for like a business owner, or maybe for like Uber drivers.
You yourself is just obviously the consistency comes from the job itself, whether you get it, you don't get it, like you said, right? So that's why in any given time when a loan is being requested, the lender asks for the 2 years.
2 years.
So tax season's in now, so now they'll ask for 2024, 2025, the T4A or T1 general. because T1 General will give you the whole entire scope of your whole entire profile, right? So then they'll use the average. So if 2024 is 200K, 2025 is 100K, so together it's 300K, divide 2, so your average only 150, 150.
Okay.
That's what they do, right? Or if it's 1 year, like you said, no good, 20,000, and then 1 year was 100, add it, 120 divide 2, oh, so 60, 60. That's what it is.
I see.
Yeah.
So does it make sense that if I start working self-employed, I should at least have like 2 years of records before I actually come in to apply for loan, like whether it's car loans or mortgages?
It's a preparation. You have to, you got to plan for your future, right?
Yeah.
If you know within 2-3 years, you're gonna buy a house. If 2-3 years, you're looking for a car, then you better these 2-3 years have that consistency income, file those taxes, and then so that when you were requested by the T1s or NOA, you have that averaged out and show the lender or the bank or whoever it is that you can suffice the loan, you can pay the loan, you can afford the loan. Yeah.
That's kind of interesting because it ties back to our previous episode when we mentioned building your credit profile. So it's actually about building a history of your credit. So it's not about how much you make right now in this month. It's actually about like you need to accumulate your record, need to accumulate documents in order to build your credit and also have like a figure history for lenders to consider your information.
In credit, in the financial world, 3 things. Number one, a lot of people misunderstood or not aware. Credit is 1, then income. Okay, and then the 3 obviously depending what you're applying. Does it make sense? Right? Do you make 50,000? You're trying to get $2 million loan? Okay, right. But number 1 is always credit comes first, because here's the best example I'll give. Here's actually two things that I want the audience to know and viewers to know. Good credit, strong credit, is equals to the person or character will always find ways and excuse to pay on time or pay off. People with not so good credit will find excuse not to pay on time or not pay at all, right? So then leads to why credit comes first. I once had a client apply for mortgage, makes about deep 6 figures, over 160K a year. Went to CIBC pre-approved the mortgage. After submitted, came back, declined. She then came to me and asked for help. I submitted I won't say submit, I asked about 4 or 5 B lenders, all declined. Strange. Then I asked the private lenders about 3 private lenders, I still remember, they all declined. So now I know the viewers like, wait a minute, even private lender declined?
Yeah.
So the client's history was she filed consumer proposal.
Oh.
Okay, it's okay. Stuff happens, COVID, divorce rate went up, a lot of stuff. Then after that, usually lenders will look at, okay, you made a mistake, you should learn from it. How come the new trade lines, like the new ones, also a little bit behind? So now the question is, okay, you make good money, then there's no reason why you should be in this position again, or soon to be again.
Right.
So then when I asked the underwriter from the private, I'm like, can you tell me more what's going on? Literally, they said 3 things. 1, either the client is a drug addict, gambling problem, or alcoholic, because it gives no absolute reason or excuse. If you make such good money income, you are behind payments. So risk, no. So even credit is good, because she filed CP and then a little bit behind. She was, if I remember, she was like 693, 698. It's not too bad.
Yeah.
So credit always comes first. They look at the credit character, looking at them, how much do I really trust this person?
Yeah.
Right? Now, let's reverse that. What if someone has very strong credit? Make it even like extreme, fully retired. How could that work? So again, normally, yes. So depending on the age, the older you get, a lot of lenders also find it risky because they're like, how much time's left? I don't know if I should say that, right? But in reality, it's true. It's true, right? If someone in their 30s has a career versus someone already 85, it's just common sense, right? But the stronger credits, the chances are getting more proof, even if the person's a retire. Again, it's back to the character of the person. They would find ways and excuse to pay on time or pay off. So whether it's, we call it not beg, borrow, steal, but in that term, they would, no matter what, pay on time, pay it off. Lenders know, because it's a character, the credit character. Versus someone, again, good money and scores not too bad or lower, iffy, very risky. Yeah.
So the income
comes second. Yeah.
What matters is your habits of paying off your debts. I see.
Yeah.
I do have like a question from me, for myself. So say actually applies to a lot of audience here, I think, because like people here, they work a 9-to-5 job, but on top of that, they also do a bit of freelancing, they do a bit of side hustles. So in this case, I have 2 streams of income. Does it actually help me when it comes to applying for a loan? Like, would my application be stronger than say if I only have a 9-to-5 T4 paystub job?
Again, it's as long as it's provable, it's okay. So your full-time obviously good, right? You have the paystubs and stuff like that. The side hustle, again, see, it really depends, right? A lot of people side hustle, oh, at night I work as a bartender, all cash.
Yeah.
Can't really prove it. I mean, you can deposit and show, hey, this is the consistency every Friday, every Saturday, every weekend. These are like, my tips and stuff like that. So depending, some lenders, they sometimes do use it. But it's depending also who, on average, they only use 50% of it. Okay, but it's like consistency, deposit. They might even ask for obviously a job letter to prove, that money is from a work that you consistently work over the weekends and hustle like that. Right? Because anybody can just say, oh, that's my money, but probably just someone giving it to you. 1 time, 2 times, 3 times, and that's it. Well, that's not income. It was just a friend helping you.
Yeah.
Right? So probably a job letter to back that up. Right? As long as you can prove it, you can show it. Right? Job letter, or even, a job letter, money have to go into the bank. Yes, it does. It can help. 100% it can help.
I see. So all in all, when a self-employed worker, they come into a dealership or they want to buy a house, a property, what they should prepare in advance before actually making the decision?
If it doesn't matter, auto loan or mortgage. Auto, I mean, it's funny. A lot of people, I just want to buy a car, just go to a dealership, right? I think you should. I think on my first episode, I mentioned, it's, yes, understand it's there, the car's parked, you can see and show, but again, you're right. Well, not knowing your true situation, not knowing what you need to bring, well, then the question now you're asking, who do I reach out, who do I ask? Do I ask ChatGPT or do I Google? So again, people like myself or, credit consultants, reach out to them. It's free of charge, right? Sit down with them and talk to them, hey, based on my situation, what can we do? What should I do? It's almost no difference. Instead of, hey, walk to a bank right now. Hi, Miss Teller, I'm looking for $2 million to buy his house. Okay. No, you sit down, talk to a qualified, licensed mortgage agent, right? And we'll walk through, give me all your, information, including, your liabilities, your assets, finding out your true credit, your income situation. And then after we calculate all the TDS and GDS, then we'll know what true mortgage amount you can borrow, which same with auto loan. Oh, based on this, you may be capped at this. Lender may be capped at monthly, maybe even as a whole of the finance cap. You don't know, right? So best is always do a bit of research, find out what your situation truly is based on everything, and then make that sort of a move to whether you go to a dealership or a second dealership, used car dealership, mortgage, same thing.
Exactly. So best to talk to professionals, know your situation, and manage your expectations, right?
Qualified professionals.
Yeah, that's important.
Yeah, because again, a lot of people will pretend or they think they know, and then they'll say a lot of things. Maybe true, I wouldn't say not true. Again, right? A backyard doctor versus a licensed doctor here. I mean, hey, who knows? Maybe like in my first episode, maybe the backyard doctor is actually top doctor in the country, but
yeah, still.
It's different, right? It's different.
We are doing their February $200 lucky draw. 1 entry per account. Let's go. Congratulations to this viewer here. Thank you all for participating.
End of the month, I'll be giving away $200 cash to one lucky person. All you have to do is like, share, subscribe, and comment and tell me what the money is towards. Let's build a better credit together.